Hello everyone, Joe Vitale, American Retirement Advisors with the Gradient Investments weekly talking points for the week ending November 18th, 2022. Let's get into stocks. Equities were mixed across the major U.S. indices with the S&P down 0.61, the Dow was up 0.11, and the Russell 2000 was down 1.70%. The NASDAQ also fell 1.51. Now overseas, the developed markets, which is the EFA, rose 0.26, while the emerging markets added 0.8%. In the U.S., the best performing sectors were staples and utilities, while consumer discretionary and energy were the laggards. Now, large caps outperformed small caps, and that's kind of been the thing going all year. So let's talk about fixed income. The Federal Reserve Bank of St. Louis President Bullard said that the Fed needs to keep raising interest rates given that its tightening so far had only limited effects on observed inflation and needs to raise rates, quote unquote, by at least 1%. Rates on the 2-year Treasury rose 17 basis points to 4.51%, while the yield on a 10-year Treasury was unchanged at 3.82. What you're seeing now, though, is you are starting to see, we actually have 5% guaranteed fixed rate, 6% guaranteed fixed rate on a 5-year right now. So we are seeing better rates. We also have, the money market, or not the money market, but the stable value account is paying almost 2.7, 2.8% right now, fully liquid. So there are some really good alternatives coming up now. But of course, borrowing money is more expensive, as you know, and the mortgage rates are close to 8% right now. So we are seeing that happen as well. So commodities, oil prices dropped on signs of falling demand with the declining economy in China following further shutdowns of COVID concerns there. And the price of West Texas crude oil dropped 9.95% last week to $80.11 per barrel. Economic data, the producer price index rose 0.2% on a month-over-month basis in October, which was better than the consensus estimate of 0.4% and the prior month rise of 0.4%. Now, excluding volatile food and energy, it was flat from the prior month and also below consensus. Retail sales rose 1.3% in October ahead of consensus expectations and on improvement from flat sales in September. On a year-over-year basis, sales were up 8.3%, and restaurants and internet sales were among the top performing sectors. Sales of existing single-family homes, which accounts for 90% of total home sales, declined 6.4% on a month-over-month basis in October, slightly better than expected. On a year-over-year basis, sales were down 28.2%. And the median price of a single-family home was $384,900, which is up 6.2% from a year ago. But we are starting to see the softening in the real estate market. We're seeing a lot of homes that are still selling, but on the market a little bit longer, and we are seeing some reductions. I think a lot of you know that already. We're starting to see that soften. So I think we're going to see a little bit more tightening on that. So let's talk about Taiwan semiconductors. Yes, we need the semiconductors, all the chips, right? We need all these chips. Well, they are a G40I holding. They saw a major new shareholder with Warren Buffett's Berkshire Hathaway. Berkshire bought 60.1 million shares of the world's largest foundry in the third quarter, and shares were up 11.43% for the week. How about TJX, which is TJ Maxx, right? A G50 holding announced quarterly profit margins and earnings growth that was ahead of expectations, although revenues were slightly below projections. Management was encouraged about the holiday and sales and margin expectations, so their shares rose 5.76% for the week. How about Walmart? It's actually G50, and of course, like holding, reported revenues and earnings that exceeded consensus expectations, including 8.2% growth in the U.S. same-store sales. Management also lifted guidance for the current quarter, and the board authorized a new $20 billion share repurchase program. Shares were up 5.37% for the week. And that's it. That concludes this week's market update. We want to thank you for being part of our ARA family. We're very, very, very thankful for you. We hope you and your loved ones have a very happy and blessed and holy Thanksgiving holiday. Enjoy, have that family time. It's wonderful. We will, of course, will be closed on part of Wednesday, Thursday, and Friday. Be back on Monday. If you need to get a hold of us, you know our number, 855-756-5700. Visit our website at aradvisorsinc.com. Don't forget to visit our Facebook and YouTube pages and share the QR code to get our newsletter. And that's it. God bless you. We'll see you again next week.